Hi, this is Mark Pizzacalla and welcome to Legalwise, what you need to know with Dr. Mark. What I want to talk about today is a recent AAT decision called Bauman versus Federal Commissioner of Taxation. And quick story about the Bauman case. Mrs. Bauman, a savvy and very much an entrepreneurial type person, 86-year-old retiree effectively. She noticed in the property market there was a couple of good things happening in the Woolooware Bay. A couple of off the plan contracts came up, 3-bedroom, 2-bedroom, decided to live in one. And the one that she decided to live in, of course, though, she pretty much went into that with the purpose of making a profit. That's critical here. COVID hit, and then upon sale made a significant loss to the tune of in excess of $250,000. So a lot of things have come out of this case, but the one thing that I want to focus on, the main issue I want to focus on, is whether the loss that was incurred of that amount by Mrs. Bowman, was that in gaining or producing assessable income? Did she really have an intention to make a profit when she acquired the property? And was the purpose of the purchase related to a commercial transaction? So these things were looked at by the AAT, the tribunal, and in fact they sided with Mrs. Bowman on the basis that they concluded that, look, this was consistent with the Meyer principle, and the Meyer principle is an old decision and essentially just focuses on profits from these sorts of ventures would be assessable income. Similarly, losses would be allowable deductions. But they concluded that, look, the evidence was sufficient there, and she was able to substantiate that there was a requisite profit-making intention at the time of purchasing the property, and the fact that she lived in it was really a subsidiary purpose. Now, that's really important, and it's kind of not 100% identical to the ATO's rulings on this matter. And so it's going to be interesting to see whether or not this decision gets appealed. Now, the AAT said, look, the buying and selling of an asset, including property, with a view to making a profit is something a business person would do as long as it's got a commercial flavour. Now, the ATO didn't agree with that, especially because, a business person wouldn't contribute to the wear and tear of a property by necessarily living in it. But that was, not the side that was taken into account by the tribunal in this instance. Really unusual decision. I think we need to focus on it and let's just see where it ends up, because it could make things really interesting in the property sector, which, as we know, has fluctuated, still is fluctuating. There's a lot of sectors doing well, others doing not so well. And so people are going to be making profits and losses over the next couple of years in cyclical times. And so attention should be paid to these types of cases. If you have any questions, by all means, please give me a call. Speak soon.